Life Plus Health Insurance Exam Practice Questions, 30 Must Know, Part 2. Question 1. What happens if the primary beneficiary dies before the insured? The death benefit is paid to the state. The death benefit is paid to the contingent beneficiary. The policy is cancelled. The premium is refunded. If the primary beneficiary predeceases the insured, the death benefit goes to the contingent, secondary, beneficiary. Question 2. A pre-existing condition is usually defined as a condition for which medical advice or treatment was recommended or received within 6 months prior to effective date, 1 year prior to effective date, 2 years prior to effective date, 5 years prior to effective date. Typically, a pre-existing condition is one that was treated or diagnosed within 6 months before the policy's effective date. Question 3. Which rider allows an insured to purchase additional disability income coverage without evidence of insurability? Cost of living, guaranteed insurability, waiver of premium, return of premium. The guaranteed insurability rider allows the purchase of additional coverage at specified ages without proving insurability. Question 4. Who funds a health reimbursement account, HRA? The employee only, the employer only, both employer and employee, the federal government. HRAs are entirely employer-funded and reimburse employees for eligible out-of-pocket medical expenses. Question 5. What is the primary purpose of a deductible? To pay the producer, to prevent overutilization of insurance, to increase premiums, to cover all costs. A deductible is an initial amount the insured must pay before the policy starts paying, which helps prevent overutilization of the policy. Question 6. Universal life insurance is characterized by fixed premiums and fixed death benefits, flexible premiums and adjustable death benefits, no cash value, mandatory investment choices. Universal life allows the policy owner to adjust the premium payments and the death benefit amount. Question 7. The coordination of benefits (COB) provision exists to increase premiums, prevent overinsurance/duplication of benefits, limit the network of doctors, deny claims. The COB provision determines which plan pays first when a person is covered by more than one health plan, preventing overinsurance. Question 8. Which of the following is considered a limited health insurance policy? Major medical, comprehensive, accident only, HMO. Accident-only policies provide coverage only for injuries resulting from an accident, making them limited policies. Question 9. Which type of risk is insurable? Speculative risk, pure risk, gambling, market risk. Only pure risks, loss or no loss, with no chance of gain, are insurable. Question 10. Under HIPAA, a group health plan cannot impose a pre-existing condition exclusion if the person has had creditable coverage for at least 6 months, 12 months, 18 months, 24 months. HIPAA ensures that individuals with at least 12 months of continuous creditable coverage cannot be subject to pre-existing condition exclusions. Question 11. The suicide clause typically excludes coverage for suicide committed within 1 year, 2 years, 5 years, 10 years. If the insured commits suicide within the first 2 years, the insurer only refunds the premiums paid. After 2 years, the full benefit is paid. Question 12. What type of term insurance has a face amount that reduces over time? Level term, increasing term, decreasing term, renewable term. Decreasing term insurance features a death benefit that decreases over time, often used to cover an amortizing debt like a mortgage. Question 13. If an insured misstates their age on the application, what will the insurer do at death? Deny the claim, pay the full face amount, adjust the benefit to what the premium would have purchased at the correct age, Refund the premiums. Under the misstatement of age provision, the insurer adjusts the death benefit to the amount the premium paid would have purchased at the correct age. Question 14. Which rider waives the premium if the insured becomes totally disabled? Accidental death, waiver of premium, payer benefit, cost of living. The waiver of premium rider waives future premiums if the insured becomes totally disabled according to the policy's definition. Question 15. What is the main characteristic of an HMO? Fee-for-service, preventive care focus, no network restrictions, high deductibles. Health maintenance organizations, HMOs, place a strong emphasis on preventive care to reduce overall healthcare costs. Question 16. Annuities are designed to protect against dying too soon, outliving one's income, disability, medical expenses. While life insurance protects against dying too soon, annuities protect against outliving one's savings by providing guaranteed income. Question 17. Dental insurance typically covers routine care such as cleanings and exams at 50%, 80%, 100%. It does not cover routine care. Most dental plans cover preventive care like exams and cleanings at 100% to encourage regular visits. Question 18. Which document contains the entire contract? The policy and the application, the policy and the marketing materials, the application and the medical exam, the buyer's guide. The entire contract provision states that the policy and a copy of the application constitute the entire contract between the parties. Question 19. In a variable life policy, who bears the investment risk? The insurer, the state guarantee fund, the policy owner, the federal government. Because the cash value is invested in separate accounts, the policy owner bears the investment risk in variable life insurance. Question 20. What is the main purpose of life insurance? To fund retirement, to protect against premature death, to pay for healthcare, to accumulate cash for vacations. Life insurance is primarily designed to provide financial protection to dependents in the event of the insured's premature death.